Hello everyone, welcome back to our daily trading forecast, and today is the very first day of the trading week. It is the 7th of June. So for the very first day, we are going to go through what we have forecast for the week. So let's begin with the euro against the US dollar. Alright, so in our weekly forecast, we are expecting that euro dollar will continue to go down a little bit further into this demand zone before it actually found support and goes higher from there. One of the reasons, as you can see, is that it is right now supported by this neckline. It came down, it broke below, went back up last Friday and found resistance, and right now it is still being resisted. Alright, so let's quickly take a look at the euro against US dollar right now and see how it has developed so far. From the opening of the market, it went down, but right now there seems to be some buyers as well. It's pulling back up, but we are still seeing that the price is kind of going lower, right? So we can still expect more downside. But the thing is, there's always a possibility it may go a little bit higher before it actually really goes down. If we were just to pull out a Fibonacci, it could possibly goes back to this level at 61.8%, and you can see that this is also a important area of interest, a lot of buyers and sellers. So it either goes down now, or it can goes back up before it goes down even further. So that is my take for now, and we are of course aiming for it to go even lower, back into this demand zone somewhere right here, which is at about 1.2 flats. So that's for euro against the US dollar. Next we have the gold. So for the gold, we are also expecting a short pullback. Alright, so we kind of know that last week it actually there was actually a sell-off temporary. It went down, but it found support at the equilibrium level, which I've already explained what is that in my last video. So go and check it out. Then it found support, and obviously there's buyers, so it rebounded off. And right now, what we are seeing is that it's starting to creep down a little bit further. Well, because after it got rebounded, it came back to this level. It's kind of being resisted at this level right here. You can see that there's a neckline as well. Alright, if we were to go to the charts. So let's just go and take a look at the charts. So if we go to the 1 hourly time frame, you can kind of see that this area itself is the neckline, because support has been seen right here in this region, 1892.93, and then the price went all the way down, but found support and went all the way up again after a weaker than forecast NFP. So right now we are starting to see it pulling back again. So our view is that we are still bullish on the gold, mid to long term wise. So this pullback is actually a opportunity for us to look for another buying opportunity. Alright, so bear in mind that it is right now, it has already found support. Buyers has already came in at this equilibrium zone. It is also somewhere at the bottom of the 2 months rising channel. So therefore, look at a 1 hourly time frame. If we were to pull a Fibonacci, right, from the swing low to swing high, right now it is already supported at 30.2%, but most of the time we like to see it pulls back further into the 61.8% level, which is the neckline right here as well. So this would be definitely, in my case, one of the best price to buy the gold again. Alright, so for the meantime, we want to be a little bit more patient. Right now the high is still getting lower. Believe that there's still a good chance for it to go down, unless we do see the price went all the way up and broke out of this level. Then possibly, it might just keep on going up right away, and after which we can just wait for a short pullback, a very small pullback, before we go and buy the gold again. So that's for the gold. Moving on, we have the Nasdaq. So the Nasdaq, I think the last week the rebound itself is pretty strong. We want to also understand that the US stock market is being fueled by hot money, in a way, printing of money by the Federal Reserve. And later on, there's a piece of news I want to just go through with you guys quickly for you to understand what's the outlook for the hot money markets right now. Alright, so in any case, we saw that the price has already broke out of this falling trend line. Alright, you can see that the very first trend line that it broke out usually is not the main trend. Okay, it will still consolidate for a period of time before it actually breaks another trend line right here and goes into a bull market. So the same could actually apply in this scenario. Alright, the very first one got broken out. Okay, found resistance, came down, but it quickly broke out of it. However, it is still currently seen resisted within this supply zone. Alright, created by this neckline right here. So if we click on the play button right now, we are seeing that it is somewhat trying to come down a little bit, but to be fair, it is not quick enough. Maybe a very short pullback later on. There will still be more buying. So if we take a look at the Nasdaq right now, on the US 100, we have seen some pullbacks right here. Just want to bring attention to this little pullback channel. So this area is where the price broke out. So in our case, we are still waiting for a stronger pullback into this level before we actually decide to buy the Nasdaq again, or the US stock markets. But that's how we view it. We think that the stock markets will continue to go up because hot money is still coming in. It is not going to end that easily. And with this, I'm just going to bring this piece of news to you. Yellen says high interest rates will be plus for US Fed. So in a way, it is kind of contradicting. Why? Because in environment of high interest rates, it is actually not that good for the stock markets because borrowing will be harder. But let's just go through a little bit of what has been said here. So Janet Yellen said President Joe Biden should push forward with his $4 trillion spending plans, even if it trigger inflation that persists into next year and higher interest rates. So I think this statement simply means that Treasury Secretary, right, Janet Yellen, wants the government to spend even more, right? In the very, I think in a very previous article, she mentioned that spending right now is still too low. It's like we are still back in 2010. So apparently, she thinks that the government should continue to spend more. So in a way, that's going to create hot money, and that's going to help to boost the stock market. We've been fighting inflation that's too low, and interest rate they are too low now for a decade. So adding that, we want them to go back to normal interest rate environment, and if that helps a little to elevate things, that's not a bad thing. That's a good thing. So what that means, I think, is we're still going to print more money, hot money. We're still going to stimulate the markets. Doesn't matter if inflation shoots through the roof, as long as it can bring things back to normal. And when inflation shoots through the roof, maybe we will start to raise interest rate back and bring it back to a normal interest rate environment. So, which also means to say, in the meantime, hot money is still going to come in. All right, the government or the Federal Reserve is still going to stimulate the economy, and that again is good for the U.S. stock markets, as at least for now, maybe throughout 2021, all the way into 2022, right? So, yeah, the Fed has committed to only begin scaling back 120 billion monthly pace of asset purchase, in other words, QE, or what we call the hot money, after there's substantial further progress on inflation and employment. In terms of inflation and employment, we are seeing a pickup. But of course, last Friday, the NFP came out worse than expected, so that's kind of dampening the case for a scaling back or tapering. So which is why it just simply means say that the Federal Reserve is still going to continue with their hot money. It is still going to keep interest rate low. Powell and his colleagues have continued to project their key interest rates at near zero through 2023. And that's still about 2 years away from 2023. Maybe they mean by early 2023, then that will be left with 1.5 years. So which also means to say for the next half year to 1 year, we are still going to see a lot of hot money. We're still going to see a lot of big government spending. We're still going to see interest rate near zero. Again, that's going to help boost the stock markets. With this, I think you can kind of understand from the fundamental view why is it that we are still bullish on the US stock markets, be it the Nasdaq, the Dow Jones, or the S&P 500. I think hot money likes to go into Nasdaq because of all the tech companies, capital ventures, stuff like this. Yes, so this is our view. We are just waiting for a little bit of pullback down to this into this zone, 13,600, 700 ish, to buy the US stock market again, or to buy the Nasdaq again. All right, and moving on, let's look at the crude oil market. We are still expecting oil market to pick up. Obviously, economy is opening up. Major economies, traveling is returning, so there will be higher demand for the oil, and supply isn't really increasing that much. So demand will still be higher than supply, which is why the price, the oil price, will still continue to go up. But it's just that we don't expect it to just go straight up and shoot through the roof like without any kind of pullback or corrections. So from last week, we can see that although it is still going upwards right after it broke out of this consolidation, but obviously there's a lot of there's some sort of resistance going along the way, and it's not going up that fast. So we do expect another pullback, maybe a stronger one, more of a major one, before we actually consider to buy the US oil again. All right, we are kind of seeing the price coming back to the bottom of this rising channel. So in a way, this is also coming back to the previous high. So, I mean, obviously right here we can see a breakout of this trend line, came back down, found support. So if you ask me whether is it a good time to buy right now, yes, definitely. In terms of intraday wise, if you're not looking at a target too far, maybe just all the way back to somewhere near the top of this rising channel, then I think definitely you have a case to do so. But otherwise, in our case, we hope to wait for a stronger pullback, and that will also means to say a breakout of this very minor rising channel, all the way back to somewhere right here, because right here is really the key demand zone. Right, this is the stronger breakout. So if it's able to come into this area, we have a much better price by 66.3 as compared to 69.2 right now. So it is ultimately a choice. You can choose to buy right now intraday. If you see one wave upwards, maybe just about this much at the max, that would be somewhere about 70. I think if you give 70 as your main target, that would be pretty good. But otherwise, you can always wait for it to pull back. Of course, you might miss an opportunity, but it's how you're going to weigh your risk to reward ratio. Okay, and last but not least, we have the Bitcoin. In our weekly forecast, we are expecting it to go lower because it's coming to the end of this bearish flat formation. So either it goes all the way down right away now, or it makes a little bit of pullback back to the top of this formation before it comes down. So based on what we are seeing right now, we are already seeing the price has already broke below, but it still kind of find some support within this region. I would say that it is pretty much a good time to sell already. Maybe you just want to wait for a little bit of pullback, just try to sell it, or you can actually start to put some selling position, maybe half of it or just a third of it. If it goes up, enter another third or the half. If it goes up, try to enter a little bit more until you reach your maximum per trade risk. I mean, that's just one of the suggestions I can give it to you. And otherwise, once you short it, the target will be all the way back to this demand zone at the bottom, or rather at 30,000. Can it go even lower? Yes, definitely. We are in the long run, or rather in the midterm, we're still expecting the Bitcoin to continue to go down because of the fundamentals that we have right now. It is not a good time for the cryptocurrency markets, especially I'm talking about these cryptocurrencies like Bitcoin or Ethereum, those very matured ones. All right, because they are still considerably high. They're still considerably high based on the historical prices. And that's pretty much for the Bitcoin as well. Alright, so with that, I have come to the end of today's week trading forecast. So thanks for watching. If you like what we have been sharing, if you like our trading ideas, do hit the subscribe button, like our video to support us, and we'll see you again tomorrow.